5 different stocks that could be potentially on sale as of right now, offering a buying opportunity that all have over 50 years, yes, 50 years of consistent dividend growth. Now, what is dividend growth and why is it so important? Well, right here, according to Investopedia.com, it says dividend growth rate is calculated as follows. It's the annualized percentage rate of growth of a particular stock's dividend over time. Now, an example of this is a company's dividends payments to its shareholders over the last 5 years. As an example, year number 1, $1. Year number 2, $1.05. Year number 3, $1.07. Year number 4, $1.11. And year number 5, $1.15. So the math is pretty simple. From year number 1 to 2, the dividend growth rate was 5% because the dividend went up 5 cents. Year number 3 was up 1.9 cents. Year number 4 was up 3.74%. And year number 5 was up 3.6%. Now, if you want to see which 5 stocks could be offering a potential buying opportunity and have all, like I said, increased their dividend consistently for over 50 years, make sure to drop a like down below, stick around, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first dividend stock that has had dividend growth for over 50 years straight is ticker symbol PG or Procter & Gamble. Now, Procter & Gamble is of course a consumer staple household product stock. And with where Procter & Gamble is trading as of currently at around $160 per share, more or less, this dividend growth king is offering a 2.51% forward dividend rate. But keep in mind, for every single name we're going to go through in this video, the starting dividend yield isn't necessarily super important, because like I said, every single one of these names has raised their dividends consistently for 50 years straight. Now, according to SimpliSafe's, Procter & Gamble's dividend safety is 99, making this dividend about as safe as it comes across any other stock or ETF in the entire market. Procter & Gamble is a massive company worth over $373 billion as far as market cap. The beta is very low, so this stock isn't really going to mess with your portfolio all that much, unless of course something crazy happens. Now, as far as dividend growth, as you can see right here, on the latest year, 7%, 6% over the last 5 years, and over the last 20 years, 8%, which is very fast dividend growth relative to other stocks across the markets. Now, to be specific, Procter & Gamble has had a dividend growth streak for 67 consecutive years. That means that year after year after year, the dividends have been getting bigger, putting more cash in investors' pockets year over year. On top of that, Procter & Gamble has 133 years without a dividend reduction, so the 99 safety score as far as dividend safety definitely makes sense. So if you're looking for some exposure in consumer staples or anything of the sorts, Procter & Gamble could be a good stock to look into, especially considering this stock pays more and more to investors in the form of dividends year over year. The next stock that has been paying more and more in dividends to investors for over 50 years straight is none other than J&J or Johnson & Johnson. Now, Johnson & Johnson, of course, also has a 99 on the safety score. Johnson & Johnson's dividend is about as safe as it gets. With Johnson & Johnson just trading under $150 right now, it is offering a forward dividend yield of around 3.33%, but just like Procter & Gamble, the dividend growth rate has been significant over time. The beta for J&J is very low. That's one of the main reasons on why I ended up buying some J&J a long time ago. It really acts as sort of a foundational pillar in a portfolio, at least it has historically. Now, as far as J&J's dividend growth rates, we're talking 4% over the latest, 6% over the last 5 years, and around 8% over the last 20 years. Now, just for an example, around 10 years ago, J&J was paying investors somewhere around $2.75 per share per year. Now, just as of 10 years later, we're basically double that, giving investors a ton more cash flow on a yearly basis. Now, as far as dividend growth streak, 61 years of consecutive increases and 108 years without a reduction. Very impressive there. So if you're looking for a single stock that has also consistently grown their dividend over time, J&J should definitely be added to your watch list. Next up, one of my favorite dividend paying stocks of all time, we're talking about ticker symbol PEP or PepsiCo. Now, Pepsi is currently trading near $175 per share, offering investors around a 3.07% forward yield. Now, in the last 5-year time frame, this is one of the larger yields investors are going to be able to get if you look at the 5-year average. PepsiCo also, just like the others, is very low beta, so it's not really going to mess with your portfolio on green or red days. But speaking of dividends, the dividend growth rate for PepsiCo has been amazing, and this is probably one of my personal favorite aspects of holding PepsiCo over the long term. Now, in the latest 7% increase, 7% over the last 5 years, and in the last 20 years, PepsiCo has 11% increase as far as dividends year over year. To be more specific, PepsiCo has 51 years of consecutive increases, 59 years without a reduction. Pepsi's dividend is very, very safe. And as you can see, they just keep increasing the dividend year after year after year at a pretty steady cadence at somewhere around 9 or 10 cents every single year, which might not sound like all that much, but if you consider an investor that collects many shares over the years, that can definitely add up. Like I said, PepsiCo, one of my favorites. I've owned it for years. Check it out if you haven't already. Another one of my favorite dividend paying stocks that also has a massive dividend growth streak is KMB or Kimberly-Clark. Now, Kimberly-Clark's dividend is extremely safe, 80 in the safety score. We're talking almost a 4% starting yield, which is definitely towards the higher end of the last 5 years. Now, KMB is also in the consumer staples area, also has a very low beta, which is probably how I came across it years ago. And as far as KMB's dividend, we see 51 years of consecutive dividend increases, but with this one, we're seeing a little bit slower increases. We're seeing 3.4% in the last year, around 3% over the last 5 years, and around 6% over the last 20 years. So nothing super crazy, although KMB investors like myself currently are seeing around a 2-cent per share per quarter dividend increase year after year. Now, out of all the stocks we're going through in this video, I wouldn't necessarily say that KMB is at the top of my list, although I do own some shares of it. And to be honest, it really hasn't done me wrong as of yet. Now, the last and final stock that has a massive dividend growth streak is ticker symbol KO or Coca-Cola. Now, Coca-Cola has been in my portfolio for several years now. It's not my largest position, but I have owned somewhere around maybe 100 shares more or less. Now, Coca-Cola currently has a 3.2% forward yield, an 80 on the safety score. And as far as Coke's dividend growth, we're talking 61 years straight of consecutive increases, 104 years of uninterrupted dividends without a reduction. On the latest, we got 5.4% increase. The last 5 years, a little bit slower at 3%, but on the longer time frame, 7% increase, which is substantial for buy and hold forever investors. Now, just as of recent, Coca-Cola raised their dividend 2.5 cents, which was actually a larger bump than what we've seen over the past few years. So could that be a sign for bigger increases in the future? I suppose it could. But overall, Coca-Cola has been more of a boring investment in my portfolio that I really honestly don't even have to worry about. I've held it for years and barely even look at it. So there we have it, guys. Those are 5 different single stocks that have all been raising their dividends consistently for over 50 years straight. And like we talked about towards the beginning of the video, I think that dividend growth is extremely important, especially for a dividend growth investor that's looking to build a portfolio long term, because even if you're not getting the biggest yields today or tomorrow, over time, if you invest into things like Coca-Cola, like PepsiCo, for example, you're going to get paid more and more over time for every single share that you own. Now, out of all 5 of the different single stocks we went through in this video, which one is your absolute favorite and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.